Good morning, evening, and afternoon, traders all around the world. In this one, we're going to be looking at the XAU USD ticker, or gold, as most people know it. Lots of people, especially on TradingView and various other communities on the internet and in the news market sentiment, focus highly on gold. It's a household asset, household name. Everyone talks about it at some point. So we're going to run through gold now, gold in the future, and what we're really looking for. Now, before I go any further, there's a really good analogy I'm going to share with you. And it's so important because if you can nail this, your trading will change massively. It's all about looking to the past to predict the future. Now, we want to make educated assumptions. And to make educated assumptions, you're nearly always going to have to use something that has happened previously. It doesn't matter what you're predicting, what you're looking for an assumption on, an educated assumption. No matter the topic, and ever so relevant in the financial markets, you're going to have to use something that's happened before, because that's the only way you can get an indication of the future, right? The only way you can make an educated assumption is by using past price data. So that's what we're going to look at today. Now, the actual analogy I was referring to, it's about a casino and roulette. If you're trading and you're just guessing what's happening, okay, you don't look at previous price action, you're just guessing on the future, you're gambling effectively, you may as well take your trading capital, go to the nearest casino, lump it on the desk, and say, look, I want to play roulette. I want to stake everything I've got. Okay, I want to go crazy today. And just bet the whole thing away. Because roulette, let's say you bet on black or red or green, doesn't matter what it is, that assumption you make is not based on what's happened before. Because it doesn't matter whether it's been black, red, or green previously. Okay, that doesn't matter. Because every result is independent. Could be read 100 times, 1,000 times. You know, it's really unlikely, but that can happen. So the point I'm making is, if you're not using previous price data or some kind of previous thing that's happened, you are gambling. Similarly, if you were playing roulette and you were betting on red, you'd be doing it because that's just what you think is going to happen or what you'd like to happen. It has no historical basis. Therefore, it's not an educated assumption. Okay, so we're looking for probability. Now, looking back on gold especially, you've got all this choppy price action. Just a note here, I would go and watch my YouTube video on this. It's really handy to deal with that. But if we just look back to something previously significant, coming on to 2011, you get this move up here. You reach up to 1925 area on gold. And then you seemingly rebound here, okay? And you get this new all-time high, a bit more than a market maker stop. And then you get over to this here, which more or less is a market maker stop, depending on your broker. You probably got people who had really tight stops taken out or were really expanding on their margin. But the point is simple here. You get a push up, price is clearly rejected. So that means sellers are moving in. That's not a preferable price anymore for longs. And that's because it's so high up after a rally from 1150. And then you rebound to it, guys. You come straight back. Now, this is exactly what I was talking about before. It is no coincidence that price rallies up here and flies away, just like it did here. And that is because you have an educated assumption at this point. You know at this point, sellers are moving in, and you know at this point, it's likely that may happen again. That's your educated assumption. So if we then look to the future, we could say, okay, well, perhaps it's fairly likely to happen again. Now, we would then change our trading size because we've seen it happen twice already, and we know eventually it's going to go through, okay? We're not going to be trading naturally the same size because we know eventually that's going to break and the probability changes. So you may drop your size at that point, but you would look back and say, okay, well, I can infer that we had a short zone here, we had a short zone here, what's likely to happen again? Okay, and that's what trading is all about. Now, you would then look for an early exit at some early support levels as labeled, okay, because that's going to be the new point for the long side. Now, if you look even closer to now, you can see again, it's no surprise that you get a candle wick on this December candle as you reach up to this price action here, okay? But all the time, you're using previous price data to predict what's going to happen in the future, because that's all you can do. And if you're at the casino, that's something you can't. So don't do it, basically, is what I'm saying. Don't bring that into the financial markets. Now, looking lower, you can see a very early support level here, okay, with key price action. You may look at that lightly long. And for risk-averse traders, you would look lower. And again, I'm inferring this whole time on what is more likely based on what's happened. And I can see my 100 MA and 200 MA creeping up. So the point I'm making today, guys, is that all the time you need to make your decisions based on what's previously happened. You're never looking to predict any future move based on what you think is going to happen or what you feel like happening, okay? Because that's never going to work. You have to look previously. And even so, as a test exercise, just look at the market and ask yourself, is this random? Okay? Is this really random? All this stuff that keeps happening, does it just happen to occur at similar points? Is it random? And the answer really is no. The markets are factual. Casinos are unfactual. Okay? It's up to you to determine whether you're going to treat your trading account like a casino, okay? And you're going to guess what's going to happen, and you're not going to use previous price action and all key rules that will help you determine future moves. Or you're going to look back and say, okay, well, this happened before, and naturally it becomes more likely. And I'm solving the puzzle that way. The markets are all about solving a puzzle. What has happened before? What clues do I have? And how can I piece together those clues to make the bigger picture? How can I piece them together so I get an end result that's repeatable and that is profitable and doesn't rely on guessing? So that's it for today, guys. Thanks for watching. And of course, come and join us in the description below. I'll see you in the next video.